All right, let's make this breakdown. So we start on the daily, high, low, lower high, lower low, breaks above, higher high, higher low, premium, breaks below, lower low, lower high, and then we never ever reach back into the discount. So you would think I should do this. I think this is my last one. It's a tricky one. So we never ever came back into the discount. So this is my last daily range. And there's another range we play with. Then, so based on this range, we can look for longs. Why longs? Longs into the premium of this overall range. And then to look for continuous shorts from this premium. Then we got an internal range. This is our high, our low, premium, lower low, premium, lower low. And this is the last range we play with. So for this case study, we will focus on this range. All right. Perfect. Then, because over here, we were looking for shorts. Why were we looking for shorts? I don't know if we can see it on here. Yes, we can see it on here. Oh, we can't. That's unfortunate. Wait, what's price? 111. That's perfect. All right. So why were we looking for shorts here? Because of this. What was that one? Let's see if I was correct. Yeah, perfect. So this is a previous monthly high. A previous monthly high. That's like monthly liquidity. That's big. That's big. So first of all, going back to daily, so we got our range. As price continue, we can see price was very impulsive down, correction on the way up, taking all this internal range liquidity. Then came down again, followed this bullish structure, was very impulsive as we can see, but as we came above this high here, this week, we can see the price start to slow down a little bit. And then after we tapped above this previous monthly high, which is also previous daily high, price immediately slowed down. There's no impulse anymore. You can see this wick over here, price slowed down. All right. So what can we say next? We got this, as we talked about it, we got this bullish structure going on. High, low, higher high, higher low, and we just broke bullish. And what do we know? We sell above all highs, or we sell above all highs, and we buy below all lows. So we got this liquidity targeted. So what is our next liquidity target? Well, if we zoom in, we get this taken. So initially I was looking for shorts from here, but even if we break the range, bullish, I could still look for shorts because of the fact that we took internal range liquidity and we have this overall bullish range. So shorts won the cards anyway. And you can see we came into this fair value gap, which was still mitigated before that. And now we tapped into that 4 hour/daily fair value gap, which is quite interesting. Going down to the 1 hour, can we see see we got a structure going on over here. This is on 1 hour. Remember, we're bullish. We're bullish, but in order to continue bullish, we have to reach discount. And what happens? We never reach discount from this point on our bullish range, as you can see. So therefore, we can for now ignore this and just focus on our most recent bullish range. This is our most recent bullish range. So when price turns bearish, we can look for sells. And what happens is that because we took the previous monthly highs, I wouldn't look instantly for shorts, or I wouldn't look for any more buys because we took such a large liquidity pool. Besides that, we took New York high and we got this impulse. Zooming into this impulse, we can see this impulse. This impulse shows bearish intent, bearish strength. We tapped above the high and boom, we went down. Then what happens? We start to form bearish order flow, respecting bearish order flow. As you can see, one, and then PY will retreat from another 50-minute bearish PY. Price reacts from that. All right. So then what do we target? Because yeah, there's like this big gap and we just only want to reach this discount really to maybe continue up or continue down for our overall lag, which is either this one, so reach this discount, or even to continue down, break bearish, and continue down for the most recent daily level. All right, let's get back into it. What do we see? We see internal range liquidity. Though it's not in the discount, it is internal range. So that's my initial final target. Next to the overall 50% of the range. And we took New York highs, we took previous monthly highs, we took some more highs, we took a lot of liquidity. So I was not looking for longs. And then now I had this 5-minute range I had on. I was following that. As you can see, we broke bearish. So, and usually I would wait, because if we didn't take previous monthly highs, I wouldn't look for shorts here. That would be shit. But because we did, I was looking to get first to the internal and then maybe continue up. But my main focus was, okay, we took previous monthly highs. We broke structure on the 5-minute bearish. So I got my most recent 5-minute bearish range. That's my focus point for now. So we can even reduce our 15-minute block down to a 5-minute block to keep it nice and clean. What can we see? We can see this wick here, which is this is my internal range. This is like internal range liquidity. This would have been a 5-minute PI, but we got no reaction from there or no entry drill. So therefore, I would look for this to be taken as well. And we come into our 5-minute PI and look at these wicks. You can see our slowdown. We go to the 1 hour as well. Look at this. So my entry was, of course, over here. So this candle was inside the trade. But look at this. Impulse, correctional, impulse, correctional, impulse. This was quite correctional, but like impulse, impulse. And then this was not really strong. This wick shows the bearish strength. So I was following that range, coming into the 5-minute PY. What do we see? Look at this. This is like clean. Internal range liquidity. But what happens before the internal range liquidity? Even reacting from this point. If we go to the 5-minute, we can see it over here. There's this fake block. So the uninformed trader would try to sell here, and we got the reaction from there, which we can mark on, or we know as early sellers. So because this is a high, this is low that led to a new high. This is my early sellers. And then not just this, we take the session off, but look at this. Oh, now we came above. Boom. Strong bearish candle taking out this low. So more people want to sell here, but price just instantly takes them out. So we got our early sellers. Then we got the 5-minute PY. What happens? Even build up some more liquidity over here. Then we break bearish. And not like, oh, we broke bearish correction. No, look at this impulse. Look at these impulses. Wicks to the upside, strong closures to the downside, showing that there were no real buyers trying to buy only over here, but then strong bullish bearish close. You got a 1-minute PY for entry. Boom. Where can we target? Because we already took Asia low. That would be like a scalp target, but we already took Asia low. But when we came up, price engineered more liquidity to the downside. They're still relative equals. So that's our target. Not just that, you got this trend line going on over here. So we got clean liquidity targets on the lower time frame. And if we go up a little bit, we took large liquidity and we got internal liquidity in the 5-minute and the 15-minute, these lows. Because we broke bearish, we can expect price to continue to take these lows. We're respecting the bearish order flow. And what did we see happen? Early sellers, people get taken out, they get trapped because they would like, oh, look at all these stops. Retail, again, retail will buy here as well, stops below. This is the shit box. Boom, short. Where can we target? 1 to 5. We can target internal range liquidity. Then we can target, or that's external range on the 5-minute. That's a low, but we can target this low and maybe even this one. But because I do 1 to 5s, I would either close at 1 to 5 or at this one. And we got all our profits secured. See what happens? Tap in, take the 50%. Price continues down. Why does price continue down? Because as I said, we never reached discount for this range. And we don't do it over here either. But here we create a new high, new low. So this is a new range. And let's see what price does. What I said. Never came into back to that discount. Here we do. So most recent like discount achieved. Price react from that. Early buyers get taken out. So we can like mark this as early buyers. And we have so much more internal range liquidity over here to target, like in the form of this trend line. but I would just mark it on like this. And then we reach discount, CPI comes in, boom, taken out. Because yes, we took this high, but with 3 pips. So we can expect price to get higher and like properly take it. But because we already took it, straight was valid. Even if we took it more impulsively, the straight was valid. But with the strong bearish close after it, I was looking for shorts. Overall, what could have been my target, or what could I have targeted? Let's see. That was the last point before we came back to entry. Why did it came back to my entry? First of all, because of news. Second of all, there's this 50-minute fair value gap. And there's this 50-minute POI. And that's where it came into. That which would have been risky to target. So the 50% of that most recent bearish range was more than enough. And that would give me a, I think a 1-7 something. Nice 1-9, almost 1-10.